They have the then before.
Yeah. Probably Philippe
Yeah,
at
sure.
the center. Good afternoon, everyone. Welcome to AIIB Marketplace session for Mobilizing Capital for Impact. My name is Jae-young Ha, Manager of a Financial Institution and Fund Client Department at AIIB. It's my great pleasure to welcome two distinguished guests from our esteemed partner institution. Mr. Philip Ong, Head of Private Market 2 at HKMA, and Ms. Christina Tan, CEO of Fund Management and the CIO at Kapells Corporation. We are especially delighted to have them with us today, as we have recently formalized strategic partnership with HKMA and Kapells Group. We just signed on partnership agreement yesterday and today. I would like to take this opportunity to thank both of you and respective your team members for your effort in transforming our shared vision into this meaningful partnership agreement. Before we begin the session, let me briefly walk you through the format. Today's discussion will be structured into two parts. First round is to provide the audience with a little more color of our strategic partnership. After that, we have a second round, which is explore the key challenges when institutional investor investing in emerging market, and then how our institution can work together more effectively to mobilize the capital through a coordinated manner. This is actually my role of the moderator, and then also I participate in the panel. So what I heard from the organizer, this is a format is similar to podcast. So I asked what is a podcast? How I lead this conversation. They said okay, this is just the free flow. The conversation is very flexible without the designated the moderator. But look at me, I'm doing the dual job. So it's the little there's too much the pressure to me. But from now I participate as one of the panel member. Okay. So shall we begin the session? Thank you. Yeah. So the first round is yes. So we made the very meaningful partnership yesterday and today. So first I asked Philip. Yeah. So we had this discussion partnership the discussion for almost a year. Yeah. And I actually bring this idea not only to the HKMA, also bring up to other the similar private institution. Particularly, I'm curious what's the HKMA's rationale on your the partnership.
Sure.
Yeah.
Sure. First, thanks for having me, and big congrats to Jay and the team on the successful AGM. So maybe to sync up, I spent 30 seconds on background of our VC program. The HKMA have invested in VC funds for around 15 years. Historically, given the size of our program, we've mainly focused on the larger cap size opportunities. But at the same time, we do note the smaller cap size, the emerging managers, does offer a compelling opportunity set, and which could be complementary to our main VC program too. So we've actually been spending time exploring ways to try to access this part of the market efficiently. And in terms of investment theme, I think among our VC-like managers, one of the key themes we see they pursue is energy transitions, given the very sizable market opportunity and the continued innovation we just see keep coming up from the space. So it's a theme that we track. And Asia and emerging markets is an area or market that we're keen to deepen a presence in as well. Really from a diversification purpose, and also being based out in Asia, we believe we have better understanding on the growth potential process within the region. And indeed, even just today, I think around 1/4 of unicorns globally are originated from this region. So that's all added together on why we are keen to explore ways to do more in emerging venture fund, particularly those that include transition as one of the investment theme. Then next is how do we implement it? I think, as I said, Asia and emerging markets is heterogeneous in nature. There's no single market. So to effectively benefit from it, we do believe we need to broaden the deal funnel or opportunity set that we track, and it would be beneficial to us to partner up with a like-minded investors like AIIB, who demonstrate very broad network in these markets, who could help us widen the net. And also in emerging markets, still the access to government is important. I think AIIB being MDB is well positioned on that too. And really, as Jay alluded, the HKMA and AIIB have been close partners across many projects. I think over time, the two institutions have built trust and understanding on the needs of different institutions. So that leads to the partnership that we announced today, where we will join hands to invest in emerging VC funds together. Of course, in terms of benefit to Hong Kong, to put in some advertisement, Hong Kong is a hub in VC and venture companies. And of course, we do hope through this partnership, we could further solidify the role of Hong Kong as one of the leading innovation potential centers. So that's my perspective. We'll be keen to understand how to think about it.
Well, actually, so my relationship with HKMA is much longer, even the before my time at the AIIB. And I think particularly compared to other, the sovereign wealth funds, the peer group, I think the HKMA is always taking the more advanced the aspect for the investment, particularly impact kind of related the asset allocation. Probably the only few the sovereign wealth fund that currently employed in their portfolio construction. So well, I very appreciate again is that you are the support and eventually we made this partnership. Thank you. And then second is Christina. We also known each other for a long time. Yeah, so I'm very happy to have today. And we also made the strategic partnership. Probably I think many of these the audience group actually from the GP side as well, and then they probably very curious how is the GP and LP is they create this the strategic partnership. So I like to also like to hear from your perspective also what could be the key success factor for building is a meaningful strategic partnership between the GP and LP.
Okay, sure. Yeah, thanks everyone for having me here. I think like Jay said, we know each other even before his time at AIIB. He was with KIC, and KIC was an investor in our funds as well. But I think for AIIB, I think it's very special because AIIB is a multilateral development bank, and its goals and mission is to actually prosper the nations around where we have make sure that there's quite unique special goals also, right? To ensure that all the nations that you are working with will prosper in terms of development as well. So I think building infrastructure for the future. And then we're also quite focused on some things like sustainability, innovation, and connectivity as the key goals. I think it's very similar to what Kapells wants to do in the world. Even though we are a listed company, we have to answer to our stakeholders, but actually eventually, I think for most of us as human beings, we also want to do good in the countries we invest in. We want to be able to return back to the communities as well. So we're very aligned with AIIB's goal and mission as well in terms to further this prosperity of all the different nations that comes together, the different world that we have. Despite all the geopolitics now, I think it's more important for all of us from the different nations to unite together as a common goal, as a pure human being. And we just also wanted to talk about Kapells as well, to explain the background, because Kapells is actually, in the past, it used to be an industrial conglomerate. So it's very well known for building homes, building ships. So we always tease ourselves. We say, actually, Singapore has no ice, but we probably built the most number of icebreakers in the world. Singapore has no oil, but we built we corner about 40% of the world's global rigs market in terms of building. So Kapell comes from a very strong engineering background, and we evolved ourselves into now a global asset manager, but one with a deep operating capabilities. So like, for instance, so just to explain, we're quite involved in sustainability, whether it's in clean water provision, like desalination plants, clean energy, clean environment. So we're very focused on all the sustainability aspects. So like we will actually provide desalination for about 25% of Singapore's drinking potable water. And it stems from our forefather Lee Kuan Yew, who actually has the foresight to see that Singapore is so tiny, we are the city-state, we are a really small nation, we don't have natural resources, so we rely a lot on actually our neighbors for help in terms of natural resources. But Lee Kuan Yew, our forefather, actually thinks that it's very wise for us to plan ahead to be able to actually desalinate from seawater to provide drinking water for the nation. So I think with that goal in mind, Kapell was one of the companies that was asked to start this. So that's why it becomes quite a successful industrial conglomerate. And now, of course, we are very strong in like waste to energy as well. We have built waste to energy plants not only in Singapore, but in places like Qatar. Also for Hong Kong government, the huge waste to energy facility, about $6 billion. We are also built for our colonial master in the UK, in Greater Manchester, Runcorn. So, and we sell a lot of tech packs on waste to energy in China. So it's about 100 over tech packs. So a lot of people in industries in China use our waste to energy tech packs as well. So Kapell is very strong in all this kind of engineering. So in the past, we used to have 40,000 people employees because of the shipyard. But now that we have actually spun off the shipyard, we still have about 6,000 employees. 300 are actually only funds management people. But the balance of them are really engineering people with operating capabilities and all that. So like, for example, we always like to use data center to help people understand our strength. So when people look at data center, they tend to look at just the real estate. But when Kapell looks at data center, we actually know how to design, equip, and build the data center, develop it, and also operate and manage it. And we just signed also a global strategic agreement with AWS. That's the only one that AWS has signed globally. And that's because Kapell is very strong, not only in building, designing, equipping the data center, but also in the full ecosystem of infrastructure. So like doing cooling, district cooling for the data center park, providing green electrons for the data center park. So things like that are very important. And then, of course, we also lately just built the subsea cable from linking America to Asia, and then from Asia to parts of Southeast Asia. So Kapell is really, like we said, quite a full ecosystem. That's why I guess even firms like AWS globally would recognize us. But we really appreciate AIIB's recognition in our technical knowledge domain and partnership. And I think, like Jay said, we actually embarked on quite a number of projects, which is meaningful and strategic to our neighboring countries as well. I think one of which, that's why we signed a great partnership agreement yesterday, is also to actually build solar systems in the Riau Islands of Indonesia. And from there, we actually built a power cable back to Singapore. And we are able to fully de-risk this project because Kapell has data centers needs. Right now in Singapore, you are not allowed, it's a moratorium, you're not allowed to build any data centers unless you have green electrons. So even though the project is started with solar in Indonesia, which is helpful, I think, and is actually recognized by the government of Indonesia as a strategic project as well, we are able to actually de-risk the whole project for AIIB and our investors through selling the energy that we have received, the green electrons, to the data centers, hyperscalers. So I think Kapell is quite uniquely placed because we have both not only funds management expertise, but also our industrial background and expertise to be able to actually create such projects. And I think working with AIB is very important for us because AIB is a multilateral and they host a lot of member countries. So very important for us because it provides a lot of credibility, and also in terms of the relationships it has with the governments, also provides us a lot of, in terms of the cloud and in terms of protection. So I think this is a great partnership because we are able to actually work on, complement each other in terms of our strengths. Yeah.
Yeah. Thank you, Christina. Actually, I like to highlight, the AIB's equity investment also evolve. So when we first start our equity business, probably we first is looking at, the fund relationship, and then based on those, the fund portfolio, we like to expand more, the direct natures, the investment. But from AIB perspective, probably the financial or the investment portfolio management type of the things probably managed by our internal resources, while I think the engineering or the construction operation, those type of the key the on ground the kind of the resource is very hard to develop internally. So from that perspective, we when we consider the strategic partnership, we think whether our partner has a very strong the engineering DNA, and through the mutual kind of the synergy between the two organizations, maybe create more the meaningful the business in the future. So this is the kind of our kind of approach to create the strategic partnership with the GP side. So this is a kind of a first round. Probably before we go into the second round. Second round, this topic is probably also very interesting topic. This is more related to how we mobilize capital, particularly in private capital in emerging economy. So before we going, I like to just stop here, and if any, yes, Rasha. Yeah, well, maybe it's so yeah. So next.
Thank you very much. I'd like to double click on a word that Philip used on when he described Asia as being heterogeneous, and I think that's spot on. How are you thinking of building your portfolio given that these markets are all different? Will you be using your own resources to analyze each market and the opportunities within, or are there other ways you're thinking about building out your portfolio given how different Asian countries are? So that's the first question, and the second question is for you, Christina. Also double clicking on the word heterogeneous. So every Asian market obviously has a need for capital, but there's also limitations in terms of how much capital those countries can actually absorb given the quality of developers, management teams, and so on and so forth. So how does Kapells think about capital allocation in that context, recognizing that every country in the region has a huge need for capital, and yet there's a limited number of ways that you can actually address that?
Great, I'll go first. And thank you for the question. Yeah, the heterogeneous nature among emerging markets is a key background we have to take into consideration when constructing a portfolio or considering how should be the investment approach. I would say it's always a balance between resource and the type of market we want to tackle on. So the team internally would definitely continue to build up the knowledge base and network in all the markets. But given the markets are different in nature, maybe small in scale initially, so we could also leverage on external partners like AIB or other partners that we have to build up that network and to prepare to grow it over time. So it will be a process. We won't expect like overnight it could be like as big as the few key largest economies globally. But at the same time, people also sometimes will talk about the scalability issue of these more emerging markets VC investment. I would say maybe my own opinion is hopefully in the space of energy transition, because the need is a little bit more universal, say, than the enterprise or consumer preference. So maybe the degree of scalability in emerging markets or in general energy transition with the right deal structure, hopefully it could broaden out over time. Of course, for any company, any project, you have to start out from one country. But once it's proven out, we hope if it's in a transition space where it's a global consensus need, it's easier to scale up. And so that's our approach, I would say.
Yeah. And for Kapell, actually, Kapell has more than 50 years of history, actually. So we are also in markets, emerging markets, whether it's in Indonesia, in Vietnam, in China. China is now a very developed market, and we typically would, Philippines also. So we have been in these markets for at least 30 to 40 years. And we actually use a lot of locals in these markets. So we believe that the locals are very important because they actually understand the nature of the market much better than just Singaporeans. So we don't actually send a Singaporean to just hate it, like in countries like in Japan, Korea, where Jay is very familiar with us, and Australia. We have local heads. So they are usually locals, Japanese, Koreans, or Chinese, whoever it is, to head up, because you need the local knowledge and understanding of the market. So we have people on the ground. There are actually a lot of people in China as well for us, for Kapell, because we used to be a developer in China, building homes for sales, right? But now we have changed our business model. Similarly, in Vietnam, like let's say even if we have 500 people on the ground in Vietnam, I think only 5 are Singaporeans, the rest are all Vietnamese. So we believe that to assess the local market opportunities, the best is to really have local teams to help us understand the need of the market, the extent of whether the project is bankable, and how do you deal with local authorities as well. But I think it's very important if we have great partners like with AIIB, with HKMA, then it actually adds to the whole ecosystem to make the project more bankable and credible. Yeah, thank you.
Thank you.
Well, first of all, I hope you can hear me. Well, first of all, I want to congratulate AIIB and HKMA for the partnership. I don't know much about the partnership, but what I would recommend is for AIIB to increase the number of such partnerships, and not only with HKMA, but with GIC, Temasek, and other sovereign wealth funds and the similar institutions in Asia Pacific, as well as other member countries of AIIB. So congratulations to HKMA. I think this is a fantastic move.
Thank you very much. So yeah, thank you for encouraging comment. Actually, this is also our team's plan. Probably, if we like to mobilize a big capital from, the kind of the same mind, the institution like, the HKMA, probably we should make some, the sellable, marketable product. So that's the reason, that actually for the VC investment, we actually formulate, the VC investment program rather than just, the single project. If we just bring those, the small kind of, the single project, probably, the sovereign wealth fund perspective, that's too small, and probably, is not easy to, the implement, the strategy. But here, we actually aggregate all the available resource for our the fund selection skill for the VC investment. So we have a dedicated team. It's 19 people. Is looking at those the fund the quality check, and then eventually we construct a well diversified the VC portfolio. Another reason for the VC is as our key the core asset of our the entire portfolio is also diversification reason. As you can see, the AIIB's main business is infrastructure. Unlike the other the institution, probably it's hard to consider other type of strategy or the asset class. So within the the infrastructure nature is how we develop the well-diversified portfolio is kind of challenging the aspect. So we consider first the sector level and the region level. even for the vintage level, through the program approach, this is a kind of the AIB way to achieve the meaningful risk return profile. Of course, V is the focus of the impact. That's I think the absolutely given. So we actually follow that our mission. But also is together with those the impact the mission. We also like to deliver the market return. So this is the reason we engage with the other sovereign wealth fund and the operator like the Kapells to deliver the outcome. Okay, so it's the conscious of time. Let me move to the second round of discussion. From here, I just the pass some moderator. I'm not moderator. It's just the podcast the style discussion. Yeah. So it's probably is the Christina. Can you ask the Philip and?
Oh, okay, sure.
Like that,
So nice of him to allow us to ask questions. Yeah, maybe it's the same questions for both of you. Like, given the geopolitics that's happening, the world is a bit destabilized. Would you have any kind of would you all review your portfolio strategy allocation? Would there be any new movements or changes in those areas? Yeah.
Philip Cox.
Yeah, I think no doubt uncertainty have increased since start of the year. And generally, when one construct portfolio, I think the most important way to tackle risks or high uncertainty is better diversification. Diversification across market, sectors, or underlying investment theme. But leaving all the headlines aside, I think there are some trends that have remained unchanged through all these noises, if not even accelerating, like energy transition, digitalization, or just general resilience in each economy in their overall supply chain infrastructure. I would say it's basically started since COVID and just keep ever accelerating. So for this theme that we have built long-term conviction that it will stay, if not like accelerating, for the right opportunity, we will still deploy. Because I think sometimes the best investment maybe not made at the most kind of consensual or when there's a heated environment. So we could take a longer term view and look through what's really driving the longer term global economic growth.
Thank you.
Okay. So we every day is sort of there's some geopolitical the event almost every day. Those factor is of course we is seriously consider, but we don't make any decision like a yes or no because of that issue. So when you see some issue like the trading war or the tax or the inflation environment, this one is provide the some the factor we more deep dive assessment and the due diligence for the certain the project, rather than just simply say because of this geopolitical issue is very difficult to the proceed or the implement. This is I think the not relevant kind of the practice for the investment. What I learned from my career is uncertainty is not the bad thing. Actually, uncertainty provide the opportunity as well. So it's from that perspective, I think of course we very seriously looking at all the factor in the world, but also this is more related to how we more thoroughly is looking at the certain the project opportunity, and then make an informed decision. And the second point is yes, this is kind of my experience. I also participated in many LP meetings. Some case, I heard some LP actually request, because of the certain country, is a conflict, or the trading, the issue, intensify the investment certainty. So they like to put just the carve out the entire exposure to the certain area. AIB doesn't support that idea because our investment is the not short term. If we have a kind of the long short kind of the functionality inside, probably we consider it that way. But our main investment is a very long term private market investment, particularly asset-based infrastructure. Which means if we just to make a decision based on those the market uncertainty, probably is very hard to the start investment because those news they happen every day. So I think I know that some LP is like to just put those the limitation. It sounds very the easy, straightforward. But I don't think that's a more the challenging approach is from AIB perspective.
Thank you.
Yeah. Yeah. And then Philip, it's your turn.
So maybe two different questions. First, maybe to Jay, that would be AIB started from infra investing and then now trying to VC fund as well. So wondering what do you see as the journey of AIB involvement? What next in your portfolio construction approach?
Yeah. Thank you. So actually, I joined the AIB. I just looking at our existing portfolio, mostly focused on the infrastructure project. You're right. I found this is too much concentration. I like to employ kind of a new type of strategy into the portfolio. And VC is a very important asset class. Their kind of a risk return profile is enhancing the overall portfolio, the profile. That said, when I first proposed this idea, the first question is whether we internally implement, and then secondly, how we justified VC from the infrastructure investor perspective. I think the infrastructure is not just the brick and mortar hard asset base, the investment. We like to build very the sustainable infrastructure for future. To do that, I think the technology component is very important. So I found all the key kind of source of technology currently developed and created in the early VC stage. So when we say in the VC investment, this is not for a very the general kind of the VC the investment. We actually is focused on the green, is the climate solution, and the technology enable infrastructure. The investment. So I think this the overall kind of a nature is fully support our thesis of the sustainable infrastructure development for future. So we actually launched this the VC as a program, not the single project level, and we actually is act as the kind of the captive fund of fund manager. Why? We think I also know many fund of fund manager focused on the VC, but their target, not over 90%, is actually US and Europe. Yeah, some advanced market. But when we looking at the kind of capable the VC fund of fund manager in the emerging market, probably I think we have a better resource, better team. So that's the reason we launched the VC. And then we, the proposal, that idea to
I see. I see.
Yeah.
And my question to Christine would be,
Yeah.
as a owner-operator of hard asset that active in both developing and emerging markets, Kapells interact a lot with different private capital investors. From the first-hand experience, could you share kind of what's the bottleneck in mobilizing more private capital into emerging market infra investment?
Yeah, I think for us, we look at both developed and emerging markets, and depending also, because we do have to raise funds, so we also depends on what our LPs are interested in. So the mandates of the LPs are also very important. Of course, we also try to incorporate emerging markets into it. So it depends on how attractive the risk-return profile of the project will be. Because a lot of LPs will tell us that, hey, since you have sold like your 2DCs projects, data centers, to the REIT, you make 50% return in Singapore. They will want to continue continuing in that fold, right? And even like our hydrogen-ready power plant, at least the return will be very significantly higher than what we underwrote, at least about 20%. So I guess there's always that, I mean, the LP's interest on hand to say that lower risk and also you get higher returns, quite good rewards. So for emerging markets, I guess the size, the scale is also smaller. There are also concerns from us in terms of managing the risk, things like currency risk. So whether you can hedge, because most of our funds are denominated in US dollars, but emerging markets, most of the times you have to deal with the local currencies in the revenue. So whether you are able to hedge out the risk, if that currency continues to be a volatile, or there is everyone through history can see continued devaluation in a currency, I guess that's one of the things that a lot of LPs would not really like to see it happening, because your returns are lower.
Yeah.
Yeah.
Yeah, and I agree the currency risk point is very topical too. I think actually this year, if we look at the currency movement between developed side of the world versus emerging, it's actually somehow similar in magnitude. And we do see currency risks as an important risk factor we should look in infra investing. So in emerging markets, generally usual, like you measure your currency of your revenue and financing or costs, you try to localize more content, or you at least try to have more inflation-linked contract to provide longer-term natural hedge.
Yes, that's right.
So there are few risks involved that that's on the mind of many investors.
That's right, yeah. And also, I guess political risk is one of the things, because whether you're able to enforce your contracts, so the bankability of the project, the reliability of the takeoff agreements and all that. So those are things that we would consider before going to an emerging market as well.
Yes, thank you. So I also like to ask Philip first. Eventually, we like to mobilize private capital for the emerging market. To do that, I think we just analyze the current the funding gap situation. So it's a huge, but also I found the much larger pool of capital currently on the sovereign wealth fund side. But unfortunately, I know the sovereign wealth fund pension actually invest based on their asset allocation approach, a strategic asset allocation approach. But I haven't seen sovereign wealth fund actually allocated some dedicated capital to the emerging economy. I know that there's many kind of challenging issue in the emerging market, but if they allocate the not large proportion, but the small allocation, probably is the very effective is a helpful capital to support the emerging market infrastructure. From that perspective, what is the challenge, and then you have any the plan to allocate the strategic allocate to the emerging market, and then if you don't have such the practice, how we can support as a MDB?
I think it does take dedication from the institution to initiate their access and coverage on emerging markets. And in that case, I think different stakeholders in the financial system could help. Say, from a sovereign investor standpoint, like we partnered with AIIB last year on the Asia Climate Strategy. I think one fundamentally believe in the viability of those projects, hence commercially it could support, but especially in space where there's a demand-supply imbalance in capital. We do hope involvement of public investors like us through our investment could serve kind of as a proof of concept to the broader investment community to provide kind of a demonstration effect, such that actually maybe these projects are bankable and viable, but it was just overlooked by other investors in the past because maybe of the smaller scale or the risks from outside in may look a little bit high. And of course, maybe linked to what Christina mentioned on like counterparty or credit risks. If we look at the credit rating, definitely in emerging markets hard and it's lower credit rating than the developed world. But when we look at project, we try to think from first principle, whether that project suits the need of the local population, whether they could afford it, whether it's viable. Then if that check the box, the issue is really from the party that we're contracted with. Then maybe sometimes through a contractual arrangement, you could sort it around. Say you could have more direct access to the fund from that project to help you lower the risk and taking less of that pure single counterparty risk. So we do believe through structuring it could help. And MDB definitely could help and involve in that too. I think governance is important in all projects companies. The best practice brought by MDBs in governance design, EHS, I think it could help de-risk the investment case to make these projects more bankable, improve their access to capital markets, be it equity or debt. And I think also with the broad deal funnel that these MDB have, you guys could definitely as a knowledge sharing platform across just general like renewable project or like a tech product that maybe parties involved with AIIB could consider using. So I think that a lot could be done. It's more on a market outreach and education issue than like a fundamental. Those things could be mitigated and
yeah, that's a great point. Actually, when I joined the AIIB, is kind of the key, the value addition point from AIIB side. Probably ESG. The most case we is a concern about the currency, which is a very difficult to manage. But the key aspect, the kind of institutional investor is still reluctant to put their capital in the emerging economies. Kind of the ESG, particularly G, the governance side, is sometimes they encounter the uncontrollable kind of the corruption issue or some is the reputation issue. But we actually very seriously looking at those ESG issue upfront. So it's probably if someone is actually finance together, probably those issue is significantly reduced. This is I also objectively recognized during my work at the AIIB. And the same, the Christina, I have a question to you. Well, I also recognize particularly in the GPA in our region, is very actively reach out to LP, and but the some reason your exposure to the emerging market still is limited.
Yeah.
So I like to create some way is from our side to support to increase the kind of exposure to the emerging economy. So what could be the kind of the possible way or solution? Is to your investment toward the emerging economy.
Yeah, I think, but Kapells actually is not also new to emerging markets because we have been in countries like Vietnam, Indonesia, Philippines, as I said, like 30, 40 years already. So we are very comfortable actually in emerging markets as well because we have team on the ground, so we have presence on the ground and we know the markets well. And actually, we always tell our LPs that more than half of the world's population is actually in Asia. So you should focus on Asia rather than just the US or Europe itself, because really, I think more than 60% of the world's population is here. And the growth trajectory in Asia is still going to be very positive, despite the geopolitics, because we also just attended a Cannes conference, and the statistics shows that even with the geopolitics, actually the US economy will be quite affected. maybe Europe next, but Asia is still going to be quite positive. Maybe because we are all growing at a much lower base itself. But because of the sheer size of our population and with greater urbanization trends that we're seeing in the markets, we are also seeing very positive demands for whether it's in urbanization of real estate, whether it's in connectivity, because definitely everyone needs more data centers, more data stored, more AI, and all that, right, happening, subsea cables. So we are still seeing very strong growth in these areas. We are also seeing very positive growth in infrastructure. For us, infrastructure, we deem it quite broadly. We deem it as any essential services that people need every day when you wake up. So every morning if you wake up, if the urban world needs clean water, clean energy, clean environment, there's definitely a demand for it. So if there is it's an essential service, there is actually cash generated, that is actually good for the LPs. So for Kapells, we are comfortable in the emerging markets, and because we have operated there, and we know we can execute these markets, we are quite, but I think like with AIIB and with HKMA, I think with your support, I think we could actually mobilize more capital, lending more credibility to all these projects as well.
Great, yeah. So we have about the 10 to 14 million left. So we like to get yeah.
Thank you very much for such interesting insights. I had a very direct question. Central Asia is definitely one of the areas that is growing faster in Asia. Countries like Uzbekistan, Kazakhstan are doing really well. We've been active there. We've seen that private equity is still in a very early stage. How do you see the region? And also on a very practical side for many people who are around here, in terms of sizes of your investment, in terms of tickets, what are the norms that you normally apply, and how do you see that moving forward? Thank you.
So let me first answer for that one. Central Asia is a very important market for AIIB. We actually dedicate team based in Abu Dhabi. Actually, is looking at the fund opportunity in the region, or maybe we can not just see the equity fund, or also the credit, or is other the project level the investment opportunity as well. One thing, our role is not just our money put into those the opportunity. Actually, we like to mobilize the external money, capital into the region. So the one side we actually look at the diligence of those projects, but also we actually try to engage the other capital source to support those markets. So I think we have all represented different the type of the investor, but I define MDV as a kind of the middle between the LP and the GP. GP actually has the very the specific operation or the engineering knowledge, and then they understand the local context. But also we need a capital. Those capital sources are from the other side. We is a very missionary organization to support this region, but our kind of the source of capital is also very limited. So the long story short, our role is not just to put our capital into those. In that case, it's very difficult to justify our money mobilize capital. So yes, that's the reason we continue to engage with this the backside of capital source.
And generally on sizing, I would say we size our opportunity based also on the market opportunity size. And the fundamental reason is we be flexible on that. And we tailor the internal setup or portfolio deployment approach to make this happen. Say, if it's a larger market that the internal team have enough resources, then we can go indirect. But it's an emerging opportunity set that maybe at this stage it's a smaller check size opportunity, but we shouldn't miss it. Then we look for more efficient way to scale up, say through external partners, AIB or some other partners that we work with.
We are not in Central Asia yet, but I visited Uzbekistan last year because AIB hosted event there. It's very beautiful country, beautiful people, and we really appreciate the culture. So I guess there's lots of growth. Like we said, all emerging markets, whether it's like from the past, Indonesia, Thailand, and all that, everybody grows because of the sheer size of the population and the demand actually for a better lifestyle, for actually clean energy, clean water, and all that, clean environment. So, still very new to us in these markets. So we are very thankful for AIIB for organizing actually our visits to these markets. Yeah.
So, Christina, this is a kind of still the idea level.
Yeah.
I didn't, the realize or discuss with other stakeholder. Now is many investor discuss, some branded finance structure. Branded finance structure. Which means if we, invite some consensual, consensually, the finance, or the more catalytic capital into the structure of the investment, which is actually the boost the overall risk return profile. In that case, the GP also more actively looking at the kind of a frontier market opportunity, or still those type of structure changes are still challenging to your investment.
Yeah, I guess because we are a GP, and monies that we have also comes from our LPs, and they have specific mandates and requirements. So I guess it's depending on their interest as well in some of these markets. Yeah.
Okay. Okay. So I saw someone. Okay. Yeah. Please.
Yeah. Good evening. My question is for Philip. I'm Pradeep. I run a IP innovation-led venture capital fund in India. As we see a lot of IP innovation-led deep tech businesses come out of Southeast Asia, India, China, how are you thinking about capital allocation in those kind of businesses, which are upcoming in the emerging sector, unlike infrastructure, which is much more stable, predictable, right? So how do you look at capital allocation to funds like that?
Yeah, thank you. Our venture investing has been going on for around 15 years. Initially, of course, get exposure to the largest market, meaning US, like 15 years ago. But I would say overall for our institution, since 6-7 years ago, we've tried to more actively diversify into Asia, including venture capital. So I think at this point, directly, indirectly, we have built meaningful assets and expressions in the key Asia venture program, and we will continue to seek to build on that, given the growth potential that just came out. And also, interestingly, say in India, I think 5-6 years ago, there was an issue of lack of liquidity, less proven exit event, but now the flywheel is becoming more proven. So we do hope it could help spur more investment into it and would help us internally build the investment case into emerging Asia too. So I think it is still demonstrate very good potential.
Okay, I saw, yeah.
Thank you to the panel for this discussion. Thank you to the panel for this discussion. So the panel touched upon 3 major aspects throughout the conversation. One was capital, liquidity concerns, and any alternative instruments that can pop up in the near future, as well as Jay just touched upon blended finance. One of the products that has been gaining traction in the last few years, at least half a decade, is secondaries or secondary funds. So what does the ecosystem, when I mean ecosystem, I mean all of you on the stage right now, what does the ecosystem think as of secondaries as an instrument, and where it is going to lead us in the next 5 to 7 years?
Generally, in alternative space, we see the increasing penetration of secondaries opportunities. It's a good way for LPs to manage liquidity, manage the portfolio, also a good pathway for GPs to do that too. So it's a good potential, and we do have some investment in that space as well.
Yeah. I mean, we see a lot of secondaries funds actually growing very quickly, scaling up very fast actually, and the ability to actually generate returns from there as well. So I guess this is quite an interesting area as well, because especially people like Kapells, we have operating capabilities. So even if we invest into a non-performing fund, in a way we can extract value out of it. So these are potential areas where we can explore. Yeah.
So I think if we like to see the very healthy growth of the private market, secondary market is definitely required. I have seen this market since the 90s. That time the probably secondary market is a very small portion, maybe is represent 1%. But now I recently saw the kind of market representation by the secondary market is over 25 or something. So which means is those kind of the new area of the investment vehicle actually provide a lot of issue of the private market transaction. So I is a very the positively is a consider is those the change. Yes, please.
Yeah, this is Mike from Shanghai Mui Investment Advisors, and I'm an impact investor. So then I listened to Christina. You talked a lot about the circular economic portfolio, and also you have the collaboration between the Hong Kong Monetary Authority and AIIB. I was fortunately involved in one of your discussions, the infrastructure startup program. That was last year. I applied, actually. Then my question is very simple. I'm now doing the green carbon and green hydrogen technology business now. I'm not doing the GP business. My question is that in your collaboration, in your the LPs, Hong Kong LPs portfolio allocation, how big proportions will you really focus on the green infrastructure? Because Christina, you have done a lot in Singapore and the recycling business. I'm just wondering, in your collaboration, how big proportion will you invest in this green infrastructure?
So if you're talking about our partnership that we've signed, I think with AIIB, I think we are quite focused on renewable energy, energy transition projects. Like we said, we are building the solar plants in Indonesia and then actually power back to Singapore. So it's actually green electrons back to Singapore. So with Singapore's signing, making sure that we are definitely a net zero by 2050, our government has actually put in place a lot of measures to make sure that in terms of our energy security, in terms of our renewable status, we are reaching those goals. So I think working with AIIB will help actually a lot of benefit a lot of emerging market and emerging countries as well. Because we also actually have importation license from Laos and Cambodia to import green energy, renewable energy through the inter-ASEAN grid, itself energy grid. Yeah.
Thank you. So the cautious of time is we didn't expect we can the consume is entire 1 hour, but it's almost approached 1 hour. So it's yes, please probably we take the 2 more the question and then the closer session.
I have a question regarding data security issue because I work for the AI office in the past few months, and because data these days is very sensitive and every country wants to have their own data centers, right? So if you're a foreign company and if you're entering emerging markets, how do you make sure like you clear the doubts for like political risk when you are building a data center? For instance, if I'm a Chinese company, then I'm trying to use data center in Malaysia, and this already caused a lot of concern for tech companies. Like ByteDance, they use data center in Malaysia, and then to train their algorithm. So do you have political concerns, political risk concerns when you build data centers? And how do you balance sort of energy concern with intensive energy consumption for data centers?
Yeah.
Thank you.
So for data centers itself, I think data sovereignty is a key area. So I think that's why I guess data centers are built in many different countries. And like Indonesia would have certain data centers built there because of data sovereignty, but a lot of companies, whether it's ByteDance and all that, I think they are also quite selective in which countries they want to go into. A lot of the more common data pool is probably captured in many of the ASEAN countries, but where sometimes they are storing very critical data, they might want to store in a country where they believe the political system is very stable, where the government actually honor the code word in terms of sovereignty, protection of data. So some of these are probably the concerns from the ByteDance and all that. In terms of electricity consumption and all carbon consumption, I guess that's where I think Kapells, because we are a technology company, so we actually focus quite a lot on new innovations in these areas. So like we built floating data centers where we use water cooling, and in terms actually bring down the PUE consumption, the PUE usage actually. So there are many methods of us in terms of, well, maybe it's liquid cooling instead of air cooling. So there are quite various methods of bringing down in terms of the energy consumption as well. And as I said, because Kapell is very strong in our technology focus, so we are able to do like district cooling for data center parks. So all this becomes very actually meaningful to the governments that we worked with. Yeah.
Thank you. So actually, time is over. So it's maybe I don't know. We can have one more. Yeah.
Yeah, sure. Thanks for the panelists. I work for an institutional investor. So would you be able to share a little bit about your exit plan? How often or how typical do you plan your exit for your large investment? And how challenging it is for the exit, especially the valuation gap? Thank you.
Okay, so I can take part of the question and see where Philip and the rest will answer. So for us, because we are a fund, so we have a life of fund, right? There is an end date to the fund. So we typically, when we enter the investment itself, we are planning for exit because it's a fixed life fund, right? So maybe it's an 8 or 10 year life. But we typically, if you want to have a greater returns, better returns, you actually plan for exits earlier. So once the assets stabilize, we will plan for exits. So, but because we are quite uniquely placed in terms of investing into things like whether it's digital infrastructure, data centers, there's huge demands for it. So the exits is actually maybe easier, and partly also because we have a full ecosystem in our capital structure. We not only have private funds, but we have listed REITs and trusts, whether it's infrastructure trusts, data center REITs, even Kapell REIT itself. So we are able to sometimes also sell down the projects to them. But of course, the governance issue becomes very important, where you have two sets of valuers on the private funds. And because, in order to make sure that our investors are happy with us, right, the results like 50% IRR for the data center. And of course, even for the REITs, they have their own governance in terms of the independent board and the trustee as well. So I guess all this comes into play because we have the full ecosystem. Yeah.
No, just having flexibility in exit arrangement is important, given the capital markets don't open wide all the time. So we could be having flexibility to carve out individual assets from a platform if needed to get liquidity, and also extending the runway that you can hold the asset, be it extending contract life or doing like refinancing earlier, such that the company, you have the power to hold on it for longer, but at the same time, once capital markets open, you could exit. I think this is kind of the key traits that we see in getting liquidity throughout the market cycles.
So most of our portfolio currently, mostly through the fund. So we won't be able to directly engage for the exit decision by ourselves. But I think as I briefly mentioned, about secondary opportunity, probably the emerging market, private market transaction or GP, probably looking at more the different type of exit route. Is particularly in what I recognize is that so many is a GP just looking at the capital market, but the capital market situation is very volatile. So it's just to rely upon those the very small channel for the exit is probably very difficult to realize. So from that perspective, yes, institutional investor also the help to support the overall the healthiness of the ecosystem of the private the market transaction, but it will take the much longer time. Yeah. So we already over is 5 minutes, and probably we have a next the market session after this. So thank you very much for attending this session.
Thank you.
And hope you enjoy. Thank you very much.
Thank you.
Thank you.
Thank you.
Okay, good.
Thank you.